Okay, so hi Sagar. So my question
Hi.
to you at this particular point of time is how to manage the first job stress when we see others joining of our age and having the greater CTC of ours. So like being the freshers per se, but the second guy is having a higher CTC than us and we are doing the same role. So how to manage that kind of stress for a new joinee or a fresher?
Right. So comparison, right? You are comparing yourself to the achievements of others, your own peers. I'll tell you what, just avoid comparing yourself to others. Like basically what happens, and today is the world of comparison. You've got Instagram, you've got Facebook, and you're seeing everyone else doing their thing. And you base your happiness off being better than others. If this is how you have defined your happiness, that means you're outsourcing your happiness. You'll never be happy, believe me. So forget about comparison. It is never good. If this is the approach that you have adopted, it is never going to work. Because life is not like a 100-meter race. It is a marathon. It is a very long race. And as long as you are very focused about what you want to do, you have to have a standard for yourself that this is there. And in case if you're looking about comparison, talking about comparison, and don't compare yourself to your peers. Compare yourself to people who have made it in their life in the field that you've picked. That way, it will be very easy to manage that stress and look at it from a much broader perspective, not just, okay, right now his CTC is maybe a couple of lakhs rupees more than mine. Don't look at it that way. Look at the very successful people in your field. And if it is comparison, my suggestion is don't even compare. There's no need for that. Look for your own thing, do your own thing, try to beat yourself. Keep on getting better at what you are, keep on refining your craft.
Yeah, that's a great answer. So I think like we really need to work upon creating a better version of ourselves instead of comparing ourselves
Exactly.
with the peers. And I'd say like trying to compare ourselves like with a person who has made that. So like wherever like we
Yeah,
want to be in
exactly.
our lives. So like try comparing ourselves with that ultimate person, like instead of comparing us with someone like who has just joined the current role. So being the
Yeah.
so being the better version of ourselves per se, ideally, right?
Yes.
Yeah, thank you for the answer. So my second question to you is, how can we try creating a work-life balance in the present scenario when someone has joined the job for the first time, like being a fresher, and that person has to prove his work as well?
So there are two things. One is work-life balance, and one is you want to prove yourself. So you also have to ask yourself, who are you proving yourself to? Right? It's like a segue from the first question itself. That if you're proving yourself to your manager, or if you're proving yourself to people who have a say in your career and in your progression, that is a big burden, right? That is a very tactical thing to do. That's not very strategic. That's not high level. But if, and that is also very important, one thing. And the other is the work-life balance. So if you want to prove yourself to your stakeholders, to your clients, to your managers, to superiors in your organization, what you want to really know and understand is what is their to-do list. What is the first top 5 items on their to-do list? If you can get that thing, and if you can align your skills to those 5 top to-do things on their list, their to-do list, top 5 items, that is a very good start. Or that will help you prove yourself, because then if you know that and if you're working towards that, if you demonstrate that, then they'll find you very useful. But again, I don't give you this as a strategic suggestion. This is a very tactical, ground level, operational suggestion, which is fine. But the feverishness to prove yourself can be very detrimental to you. So it's okay, you did not prove yourself, fine, no problem. The question is who you're proving yourself to, right? If you're proving yourself to yourself, that is a better goal to have. That is a more longer term to go longer term goal to have, and then that also connects to your work-life balance. you know. So if you realize that, okay, at this particular stage, right now, I have got a lot of time, I've got a lot of energy, I can put in a lot of effort right now. So at this point of time, I can pick on a few things, right? But as you progress, you'll realize that your career progression and your social life and your other commitments, that progression, they don't align, because right now you're young, you've got a lot of energy, but you don't have experience. That is the only thing that you don't have. As you progress in your career, you will have a lot of experience, but then you'll progress in your career. Like you'll get into middle management, and then you'll have more responsibilities. You'll have team members. You'll become like a sandwich, because you'll have seniors and you'll have team members. Plus, at the same time, you'll get married. You'll have children, so you'll have to spend time with your children. You'll have aging parents. That is also there. So all of these things will have a lot of demand on your time. So there is no permanent solution to that. You've got to consider what is your situation right now. And then if, let's say, you've given a lot of time to your work, maybe for a project, maybe 1 month, 2 months, then you realize, no, from within, you realize that, oh, I haven't given enough time to my parents. I haven't given enough time to my family. So uh, you'll have to switch according to that situation. There's no one answer to that. It depends. But right now, like for all the people who have started off, you should really, really invest in learning and in creating a very strong foundation for yourself.
Yeah, so that was a nice one. I guess like this answer would really help the audience as well, like who are like looking for the same answer or like the similar questions I say. Yeah, so thank you so much for the answer. So one question from my end is, and I've been talking to various people as well of my age. There can be some scenarios, like generally, like when a candidate is joining a firm, like he might be burdened up with so much EMIs, right? Having like multiple loans, education loans, or maybe kind of some personal loans as well to support his family, right? And his main agenda or the main requirement for the job would be to like pay off his EMIs and also to support his family. So how can that person handle that work-life stress with the family requirements or the family stress that he's facing? How he can outperform everything and he can be a good candidate for that particular role and job and can balance like both the aspects per se.
So yes, this is a real thing for a lot of people in corporates and in tier one cities. So there are two things. One is deep rest. That gives a lot of clarity as to what you really want in your life. Sometimes you see yourself stuck in a job, right? And you want to, and it is because you don't have the clarity, because you're so stuck in the job, you're not even thinking about any other alternative. This is one of the things that I have noticed. A lot of people are stuck in that. So you want clarity, and this is one aspect, and the other is dynamic action. You know, you don't think about just today. You don't think about just this week. You think about 10 years, 20 years, 50 years into the future. If you can think about that way, if you have like a big vision, and then you throw yourself completely to get that vision to manifest, you know. So these are two things. If you have, and see, when you are in the thick of the things, like when you are really into it, you feel like, if even if I'm giving 15 hours, 16 hours, 17 hours, still it is not happening, right? Still the work is not getting done. There is still more, there is still more. So you want to do a 80-20 principle over here. That what is that activity which gives me the biggest bang for my buck? Where can I get 80% of my effectiveness? And you focus on that. You know, that is dynamic activity. At the same time, you also want deep rest. So you must have some meditation or pranayam or some kind of practice that allows you to take deep rest, because then your intuitive abilities will enhance. You know, there are three ways in which you get knowledge, in which you make decisions. One is through your senses, what you see, what you hear, right? These are the things. So you see the sun is setting, right? So you see, oh, the sun is setting. This is one way from which you get knowledge. The other way is intelligence. So when you ponder over it, when you think about it, when you look at it from an intellectual perspective, from a much broader perspective, you realize that the sun is really not setting. It is just appearing to set. It is not actually setting. That's not it. It is there, right? In fact, the earth is going around the sun. So this is the other way. And third is the intuitive ability, the gut feeling, right? Sometimes you know that this is what I must do right now. This is the person that I should take guidance from. This is the person that I should talk to. I think this is a great opportunity right now. And that is not coming from any logic or it is not coming from any senses. It's just a gut feeling. So we have never nurtured that gut feeling. And the way to nurture it is deep rest. So meditation is very helpful. It helps with the intuitive abilities. That is when you get the right thought and you get it at the right time, and that is when you get the opportunities that gives you that elevation in your career, that your financial situation is taken care of very easy.
Yeah, of course. Like meditation is the key. Like it really helps the people groom themselves and to relax and think about the actual situation and come up with the fruitful results or ideas about it. Yeah, so really nice. So my next question to you is how to handle a situation which is too demanding and stressful.
Again, I'll tell you the same thing. Meditation is really, so see, this is how um, there is one, you look at your own life. When you were a student, at that time also, there were lots of demands and there are lots of challenging situations in your life. But you have been able to overcome that, right? And you will see there will be more challenges in it. As you progress in your career, there will be more and more challenges in your life. So you want to prepare yourself for that. Also, you will notice that suddenly tomorrow you will not get a challenge that will just break you. Like tomorrow, suddenly, nobody is going to give you a challenge which the Prime Minister of India may have, right? Or nobody is going to give you a challenge that the CEO of the entire organization will have. That is not going to happen. So the challenges that you will get, you have this very deep faith within yourself that these challenges are coming to me only because I am able to handle them. Otherwise, the challenge is not going to come. If you have this deep faith within yourself that yes, I can handle it, you already sorted. It's already done. Think about it that way.
Yeah, yeah, so that's really good. Like we'll be thinking about that and like implementing the same in our real lives. And I'll be like motivating the other guys like watching this podcast, like this video of ours, to like implement the same. So my last question to you is, we have certain roles in management corporates, like which are quite hectic, right? And you have to be like on your toes always, right? The situation is very demanding. So in that kind of a situation, like dealing with clients, very stressful roles, like on the toes profiles, like how can we manage our physical strength? So I would say like physical and mental both, because like meditation is one such thing. Okay, like completely agreed. So what can be the other ways in which a person can balance the physical health with the mental health?
Again, like I said, life, overall life and career is a marathon, right? So you always have to think sustainable. What is sustainable? And see what happens, sometimes in career, people get burned out because they are looking at it from see, have you heard this your parents may have said this to you. See, Maurya, all you have to do is clear this MPA, then you're sorted for life,
Yeah, yeah.
right? Oh, all you have to do is you have to clear this 10 standard, then you're sorted for life. All you have to do is you have to clear this graduation, this is a very important thing, then you're sorted for life. That is never going to work. That thought process that all you have to do is give your 100% in this particular thing and then you're sorted for life, that is never going to work. Your whole life is a big marathon where every moment you're struggling in your career, you're focusing, you're putting in your hard work, you're taking action, and that is not a one time thing. So you have to think of what is sustainable. Can you work 12 hours a day on a sustainable basis? That is not sustainable. Can you work 15 hours a day on a sustainable basis? That is not sustainable. Can you work 18 hours a day on a sustainable basis? No, that is not sustainable. Does that mean that some of the days, these big days will not be there? There will be big days in your life, right? There will be situations where you are working 15 days, every day you are working 15 hours, 18 hours. I've done that in my career. There have been instances where I'm working till 3 in the morning, then I come back home, and again I've got responsibilities at home. I'm taking care of my baby at home. So these things will be there. But on a much longer time frame, you have to see what is sustainable. And you have to have a framework that allows you, your body, your mind, your emotions to thrive. Some exercise for your body, some framework that allows you to release any pent up tension or negativity, meditation or listening to music or dancing, some practice, and what is sustainable. If you have that from a much broader perspective, on a much longer term vision, that is going to really help you in these sort of things. But if you're only looking at it as a silo, then it's a big problem. It is not a silo, right? You have to look at it from a much broader perspective. Of course, having said that, there will be challenging, there will be demanding periods in your life where you are giving 18 hours for like a full month, and it is just continuing and you feel that it is not ending, right? So those periods will be there. Like, you cannot be unrealistic considering that we are working in a corporate environment where it is a demanding environment. There is a lot of demand. So yes.
Yeah, completely agreeing with you. The sustainability is very important. And it's like very important to take care of our mental and physical well-being and have a long term in this thing. Like it's not only about the short term, but having a long-term sustainability to support both our physical health as well as the mental health. Yeah, so completely agreeing with you here, Sagar. So thank you so much for answering all my questions. And that would really help the people like all over the globe, I suppose, like who would be like watching our video upon this. So thank you so much for the questions, for answering them.
Most welcome, Maurya. I actually have a few questions of my own for you, So from a stock market perspective, I wanted to understand, we're just changing gears from mental wellness, physical wellness, emotional wellness to the stock markets and to the financial wellness, because that is also a very important aspect of our life.
Correct,
And
correct.
from that perspective, I have a few questions, one of which is, are you bullish about any particular industry or segment for the next couple of years in from the Indian stock market perspective?
Okay, yes, that's a good question. And that's like one of the questions people have been asking about to a lot of people all around, like which sector is the best one for 2024 and beyond. So for the purpose of long-term investing, I really believe that industrials and manufacturing can be one such sector. Though the sector has not been the first time that the sector like will be performing in the subsequent years, the sector has given enormous returns in 2023 as well. Right. But we have seen all those support, like all the support this sector has been getting from the government of India through PLI schemes, through the public expenditure, the capex, and now the private capex is also coming into place. Right. And all these companies into industrials and manufacturing have really performed well. Their earnings, their margins, their cash flows have been really strong because of all these supports being get from the government. And India, of course, is trying to become the manufacturing hub. We're starting from electronics to like assembling and manufacturing of iPhones to bringing up their own laptops and different kinds of own components as well. So all that supply chain hub or the manufacturing hub, I believe, is getting shifted from China because we talk about this China plus one strategy always. So all these manufacturing hubs, all these companies are coming up in India and they're trying to set up their plant, the manufacturing hubs to scale up their operations. And one thing also that we need to understand is we all talk about the small cap and the mid cap rally in 2023, right? So like one related point. So small cap, we all know they gave around a return of more than 80% in 2023, and mid cap gave a return of approximately 55 to 60% in 2023. But one thing that we tend to ignore is that when we talk about the Nifty 50 index, it comprises of the top 50 market capitalized companies, having the largest weightage to financial services around 30%, having like 12 to 13% for IT services, and like 11 to 12% for the oil and gas. But the composition or the percentage of this manufacturing and industrial companies is too small in the Nifty large cap, right? In the Nifty 50 index. But the percentage of these companies in Nifty mid cap and small cap is higher. It ranges from around 15 to 20%. So one reason also why the Nifty mid cap and small cap index outperformed in 2023. But here as well in 2024, being cautious and taking into consideration the risk factors and also supporting the manufacturing theme and the theme for industrials, we can focus towards particular stocks and not directly putting our money towards a small cap index or a mid cap index to play a safer side, because the index has already rallied by more than 50 to 80%. So one space I believe is for like industrial manufacturing. The second space which I believe can do really well can be towards the EMS space, electronic manufacturing space, like something being derived from the first theme, because this theme, of course, is expected to grow at a CAGR of like 16 to 17% in India. And if we can find a sector which can grow at a growth rate of more than our GDP, the growth rate of India, because GDP is expected to grow by 7 to 8% in like fiscal 24, and by around like 6.5 to 7% in like fiscal 25. And if we can find an industry which can grow at a higher rate than the growth rate of the country, so that industry can do really well. And also the pharma industry, and especially for those pharma companies which are into APIs. So APIs is the active pharmaceutical ingredient, the raw material for the medicines. Earlier, we used to import a lot of APIs from China, from US, from South Korea. But now all these specific companies into the pharma space, which are into this API manufacturing, can do really well. Because again, this API industry, to my knowledge, is expected to grow by more than 14% CAGR, which is more than the growth rate. So these three sectors, I believe, we can be like bullish upon. And the last sector, just to support, can be financials. Though financials towards the banking space, though they haven't performed so much, I believe, in terms of the private sector per se, because there have been questions upon the NIMs, there have been questions upon the credit to deposit ratios, banks having a higher credit to deposit ratios and lower NIMs. But one thing that we need to understand is, in the current scenario, the banks facing the problems of deposits to garner deposits, right? Because the people have been going towards equity markets and getting that return. But the thing is, whenever the interest rates are expected to go down, the interest rates on the fixed deposits will go down later, because the banks have to garnish more deposits and they have to maintain their NIMs. So currently, if the rate of interest goes down, there would be price in the customer deposits later. And hence the banks might face a near-term challenge in the NIM margins. But in the long term, fundamentally strong banks, be it private banks and PSU banks, can really do good. And we have seen it through the results in the previous quarters of various private banks as well. So that's my take.
Thank you, Maurya. So to sum it up, we've got manufacturing, we've got pharmaceutical, and we've got the financial sector, specifically banking. All right. Are you bearish about any particular industry for this same period?
Bearish is a bit tougher one, because it's the time for India. The next 10, 15 years are a time for India, like where China was 15, 20 years back. So India has just started that phase, and it's a growth phase for India. Not particularly bearish for any particular theme, I suppose. But I suppose I would be neutral somewhere upon the IT theme.
Okay.
Because IT is
Okay.
something which is, I understand, it's a growth industry. But currently we have seen a kind of a stoppage or a kind of a reluctancy that has come up into the IT space towards their expenditure. Like we have seen the cut downs in the number of employees in the IT space. And also the IT space is something that also gets governed by the expectation of the fall in the interest rates, because it's a growth sector, a growth theme, right? So till the previous 2 or 3 months, we had the expectation that the Fed would be reducing the rate of interest by March. Then later we had the expectation June. And now after the new numbers of inflation, new CPI and PCA numbers, like which are higher by 0.1%, we tend to assume, or the analysts tend to say, we might not even get a rate cut this year. Or it can be a rate hike as well, like maybe at the end of the year. So these kinds of scenarios are going upon. The IT sector being a growth sector, of course, being affected by the interest rates, and of course, the sentiments by the people, being the growth sector. So this sector, I suppose, for a near term or a medium term, might face a challenge, like because of the growth rates and the kind of expenditure which these companies have stopped to do. But in the long term, it can be a good space, because IT is the future, AI is the future, and all those kinds of artificial intelligence themes and new themes like which are coming up with the IT space can really do well. So up from a medium term, a short term to a medium term perspective, I believe the sector might not do so well. But if you're going for a long term investing, 3 years from now, 5 years from now, the sector can do really well. So I'll be just neutral on IT. So that's my take.
Okay. Cool, thanks. So you're not really bearish about any sector, but if it you could do, if it would be nitpicking to say that IT is one of the not even bearish. You're not even bearish about it. You're neutral about it. Cool.
Neutral.
Right. So now my next question is about mutual funds. So most, and this question is coming from the retail investor mindset, where a lot of retail investors are investing in mutual funds. Which mutual fund you think is reasonably safe, and a retail investor may expect up to 25% or more return per year, at least for the near future, like 2024 or 2025? Which mutual fund would you recommend?
Yeah, so that's a very tricky question because one thing is like we all say that mutual fund sahi hai. But one thing that we also need to understand is the past performance is not always the indicator of the future results, right? And whenever we are going towards a mutual fund to purchase a mutual fund and targeting a 25% return. So one thing also we need to understand is this 25% return is a very high return, a very good return. And a fund which has been giving this amount of return in the previous year might not give the same return. And also, we
Correct.
must also not like look into just the past 1 year return of a firm or a past 2 year return of a fund. We must take into consideration at least a 3 year performance, a 5 year performance. That is why even I am also skeptical about the NFOs that we have, the new fund offers. Till I'm not sure about the I would say the performance of a mutual fund, I won't be focusing towards buying that fund or like pouring my money. So from a 3 years perspective, 5 years perspective, if someone wants to get good return, at least more than 15% per se, right? For a safer scenario per se, because 25% also this fund can give you, like these funds can give you, but at least having towards a neutral stance or like towards going towards a good funds, like which can expectedly give you like more returns than 15%. One fund which I believe is like Parag Parikh Flexi Cap can really do good because the Flexi Cap funds, they really have an advantage of investing into different proportions into the different assets classes. Because like when we go
Right.
towards a multi-cap, like it's a kind of a cap, like by the RBI, by the SEBI, like you have to put in like 25% towards large cap and then like 25% towards the mid cap, small cap, and the remaining anywhere per se. But in flexi cap, you don't have that kind of a barrier. The fund manager can
Okay.
allocate, he can allocate and reallocate and can have a dynamic asset allocation towards the multi cap, towards a large cap, small cap, mid cap, depending upon the market movements, right? And the flexi cap also has an advantage of the foreign funds investments, though that has been capped, like the cap had been crossed last year. But still, those funds having the exposure to that limited amount of foreign investments are also pouring to that gain of individuals, right? So Parag Parikh Flexi Cap, like giving around 18 to 19% CAGR over a 3 years basis. Then we can also have a DSP equal weighted fund. So that is something which people don't talk about, but I've been hearing about and personally being favored towards that fund as well, a DSP fund, because that is something which has given an annual 3 year CAGR of more than 20%. So that is something which is really good because people tend to be a bit skeptical towards investing into an equal weighted fund, right? Like which is allocating weights equally towards stocks in a particular index. But the drawback of the fund can be if the second half of that index is not performing well, the fund can go down. But over the past 3 to 4 years, the fund has really done good. So an equal weighted index having a 3 year CAGR of more than 20%. People tend to go for quant small cap as well. But small cap, I'm a bit skeptical about. As I said previously, it's better to go for individual good stocks in small cap and mid cap, like instead of going towards a direct small cap. Then we can also go towards an HDFC or an ICICI growth fund, like which takes into consideration or a growth fund or a value fund, focusing towards the thematic investing. Because ICICI and HDFC, like giving a return of more than 17 to 18% CAGR, like those growth and thematic funds, who tend to take into consideration good growth themes, right? Like which can really do well. So that I believe these four funds, Parag Parikh, DSP equal weighted, and HDFC or ICICI growth fund or a thematic fund. And if someone is going for the ELSS, that person can plan to go for an HDFC ELSS plan, which is also giving a good return of like 15 to 16%. So that is something which I believe can be good books.
Great. Thanks, Maura. That's quite a few funds for our viewers to consider. And with that, we come to our thoughts. What are your thoughts on Bitcoin and Ethereum valuations?
Yeah, Bitcoin, Ethereum, I understand. Because the thing is, again, we have seen more than 30 to 40% rally on the YTD basis for Ethereum and Bitcoin valuations. But the something is that I believe that Bitcoin and Ethereum is something which can be priced currently and not valued appropriately, right? Because valuation, it's difficult for these cryptos to forecast their future cash flows, like maybe in the form of earnings, their cash flows, or companies running these kinds of cryptocurrencies. So what percentage in the cash flow need to be taken into consideration to forecast that future cash flows? And the problem is, how will we discount these future cash flows? Because when we discount these future cash flows, we take into consideration a kind of a discount rate that highlights the risk, right? Cost of equity, it's fine. Cost of debt, it's fine. But what's the cost of a cryptocurrency? The risk is endless. We cannot take a discount
Yes.
rate being 100% or 200%. We cannot just divide a cash flow by
Yes.
200%, right? So how can we judge, or how can we calculate that discount rate? Though there are like many people who tend to value the cryptocurrencies. So, but my question to them openly is, how are you calculating these cash flows? On what basis are you calculating the cash flows? Because you
Yeah.
just give us the numbers and you just give us that kind of a discount rate. But how has the discount rate been calculated? Right? Because these things have no fundamentals. So I believe these are currently priced, and like whenever we are trying to invest into these cryptos, I guess Bitcoin is something, or Ethereum is something that can be looked for to the max, because Bitcoin having the concept of the lack of supply, right? Because like that thing is in the market and the value shall go up. And Ethereum trying to overcome the kind of the drawbacks of Bitcoin, right? And also one thing is there, like when we talk about these cryptocurrencies, is that if you are planning to have a certain kind of an allocation towards these cryptos, always invest that amount whose loss you guys can bear. If not, then stay away. So currently, I'm seeing the cryptocurrencies from a pricing perspective and not from the valuation perspective. Yeah.
Thank you, Maurya, for your candid response. I love your response, especially about such a risky alternative asset. So we have covered the segments, we've covered mutual funds, we've covered something as risky as Bitcoins and Ethereum valuations. Finally, that takes us to our last question on financial indicators. So can you share a list of financial ratios that can be very good indicators of a company's health and growth?
Yeah, so that's a very good question, and people should be analyzing the same. So my personal favorite metric is cash flows, free cash flow per share, or simply the free cash flows, because that's the final amount of cash flow the company has after paying off everything. Because free cash flow, ideally, like we are trying to take into consideration the earnings before interest and tax, and then we're adding back all that depreciation and the amortization and subtracting the capex and the working capital requirements, and having that free cash flow to the firm after all the requirements have been made. That's a clear cut indicator, because I believe that the profitability of the company can be manipulated. It can happen that, yeah, it can clearly happen that we have like sold off something, right? And we're still like yet to receive the money for that, right? And we're still showing that money as a receivable, right, into our balance sheets. And we're still showing that amount as a credit sales in the P&L statement. So that proportion of the credit sale can become a bad debt also. It might happen that proportion of 100 rupees per se, it might turn down to be a bad debt. And ultimately, the profitability might come down in the subsequent quarter through the P&L statement, or the
Yes.
balance sheet position might become certain weird. But the cash flow will show you the actual amount which has been received, the actual cash sales. So that is one thing which I believe. The second indicator which I focus towards is towards the liquidity, the cash ratios per se, the current ratios and the quick ratio, showing how much cash or the liquid assets the company has to pay off the current liabilities. The third kind of metric which I focus upon is the return on equity and the return on capital employed, ROE and the ROCE. But one thing that we need to understand is that when the company has only equity, it's good to use ROE. But when the company has both debt and equity, use ROCE and not ROE. Because if in that case, if the company is having debt and we are using ROE, the ratio can be again manipulated. The ratio might be overvalued because that proportion of equity in the denominator might be too low and the ratio might become too high. So for those companies
Right.
having debt, it's better to use ROCE, which might have a lower number, but it would show you a clear indication for the performance of the company, how much the company has been able to pay back to its capital providers. Then I also focus towards the debt to equity. The debt to equity being nearer to zero, but even if the debt is high, I focus towards is the debt being used for some productive purposes. Because I believe that till the time the cost of debt is less than cost of equity, taking more debt can have a magnifying effect upon the EPS of the firm. Because taking debt is a double-edged sword. If the cost of debt is lower than cost of equity, it's good for the firm. But if you are taking more debt and that becomes unproductive and the cost of debt becomes higher than cost of equity, the EPS of the firm can fall. So it's a double-edged sword.
Right.
Just a few indicators for this session, like we can discuss further, like in some other sessions as well. But the top 3 or 4 like indicators, like which I believe are the good ones.
Thank you, Maurya. I think those were very good insights on some um, a broad range of uh, things that people should be aware of when they're considering their financial growth and their financial security. Yeah, financial awareness in general, financial awareness, because that's a very important aspect in today's life, right? So, thanks a lot, and I'll see you in our next session.
Yeah, surely, surely. Thank you so much, Sagar. Thank you so much for putting in your viewpoints as well. It will really help our audience from both the perspectives. Thank you so much. I'm looking forward to connect with you again. Thank you.